Welcome to SDMIC classes. Nothing is impossible for a brave and hardworking person with a willing mind. So with a will, you work, definitely you can get the result. We continue with our chapter 1, Introduction to Partnership and Partnership Final Accounts, part 13. This is the 13th class. Hope you must have watched the previous classes. I believe you all must have understood that. I request you to pay attention now. We will continue. Now, before we reach the final preparation of final accounts. Okay. Now let us see. Before getting into this previous classes, for the preparation of partnership final accounts, we learned the contents and all these things. Contents of the partnership, introduction and necessity of preparation of final accounts, preparation of trading account, preparation of profit and loss account, and the balance sheet. With the following adjustment. These important adjustments in the final accounts we have learned in last few classes. Now before we just move to the thing, we will just learn what is a trial balance. So what we learned is important adjustment, the contents, the important adjustments, and the competency statements, the introduction, etc., and what are the various steps in preparing a financial final account. Various steps in accounting. Preparation of journal and subsidiary books, which we have already learned. Preparation of ledger, that's also learned. Preparation of trial balance, considering adjustments, and this is the first trial balance. And once adjustments are given, the adjustment should be passed in the books of accounts, and then final balance sheet trial balance will be prepared. And then if it is if that before the adjustments after the first trial balance, if the adjustments needs to be directly passed to the final accounts, then how the effects are given, that we have learned in our last few classes. 4-5-6 classes we have learned that. Then after preparation of the trial balance, preparation of final accounts, which consists of trading account, profit and loss account, and balance sheet. As per Income Tax 1961, financial year starts from 1st April and ends on 31st March. This is everything we know. What is the necessity of preparation of final accounts? Everything we learned. The preparation of. Okay. Now then, after that, before going to learning before just doing the preparation of the explaining the final accounts part, I just took you into the important adjustments in the final accounts. Some important adjustments in the final accounts. Because it is not necessary that all the items should be shown in the trial balance. All the entries must not have written in the books of accounts at the time of preparation of the final trial balance. Why trial balance is prepared? Trial balance is prepared to just make sure that the arithmetical accuracy of the accounting is done properly. It's not necessary that once the arithmetical accuracy of the trial balance is correct, that means that it is 100% correct. There may be some principal errors, some other mistakes or errors corrupted to the balance sheet. So those things also need to be addressed. So once the trial balance is prepared and it is valid, then some other adjustments like depreciation entries, some outstanding and prepaid, etc., many entries that we discussed. These 22 points we discussed in our last few classes, and then some hidden adjustments in the trial balance. That is also we learned. Also, we learned the important points. Important points also we learned. I have already discussed these points, and also the treatment of some important items appearing in trial balance also. That also we learned. Then steps for solving the problems. This is also we learned. What are the steps for solving the problem? This is just to solve the problems. Okay, means when you have given a sum, the problem is given, and a trial balance is given, and then the adjustments are given, then how to solve the problem. That steps also we have explained. Again, we can, because this is very important, prepare the necessary accounts including the working notes. Second, place some mark on the trial balance items for external as well as internal adjustments. Then third, go through the trial balance items and give only one accounting effect is subsequent sequentially. Then go through adjustments and give two accounting effects. So trial balance item, when it is given, this is only one effect should be given because it is directly taking from the trial balance. And then if the adjustments are there, which is not given in the trial balance, is given separately as an adjustment, then go through the adjustments and give two accounting effects. Means one, if those adjustments which are not appearing in the trial balance, which then that adjustment entry should be given two effects because it is given externally. So when there is if there is for a debit effect, there should be a credit effect should be given, and vice versa. Then close the ledger in the working notes except capital. Then find gross profit, net profit, and transfer it to individual capital accounts. Then find the closing balance in capital and transfer it to the balance sheet. Then tally the balance sheet. These are the steps we learned. Now, before we getting into the preparation of the, I will show the pro forma of the trial balance, trading account, profit and loss account, trading and profit and loss account combined, and then a balance sheet format, how to make it. Okay, it will be very easy for you to make the final accounts. Can do the sums very easily. So first you should know thoroughly the format and where the effects are taken. What are capital expenditure, revenue expenditure, balance sheet items, asset side or debits, liability side. All these things you should know. Once it is clear, and then it is and once you understand properly the important adjustments what we have learned last classes, 22 points and a few other points, it will be easy for you to just to make the final accounts. So now let us just start with the trial balance before preparation of the final accounts. What are final accounts? Trading account, profit and loss account, and balance sheet. These are the final accounts. Up till here it is not final accounts. These are primary stages actually. Okay. So now once if all this works, means journalization, subsidiary books, preparation of ledger, preparation of trial balance, considering adjustment, and then comes with the preparation of final accounts. So first we should know a trial balance, the format of the trial balance we will discuss. Okay, let us start with this. Let us start with trial balance. Now, partnership final accounts, three parts of final accounts. Before preparation of final accounts, a trial balance needs to be prepared. But final accounts consist of trading account, profit and loss account, and balance sheet. Now, in the trial balance, the rule is that you should be very, very clear with this. Debit all debit balances in the debit side. See, when you take the ledger, you total it. Means what are the means 1, 2, all this now means whatever the means. See, total this like this, no, total this, total of the ledger debit column and total of credit column. Here it comes 500, 200, 50, 80, 900. See, see, this is a totaling of the ledger. Okay, ledger. For example, this is a sales accounts. For example, sales account, sales account. Sales account. So now this is a total of the credit side, and here maybe some job this is not there. This is a return, समझो return आ गया. So what is the thing? This is a totaling now. Means once this is done, this will be minus. Okay, out of this will be minus. Now this is a total of, this is a totaling and balancing. ये जो balance जो है, ये जो balance को carry forward करेगा, means इसका इसमें trial balance में ले लेगा. Okay, यहाँ for example this is any other expenditure account. कोई भी expenditure का कोई भी एक्सपेंडिचर दो, कन्वेंस रहने दो, ट्रैवलिंग रहने दो, सेल्फ रहने दो, सैलरी रहने दो, रेंट रहने दो, वट एवर इट इज़, इलेक्ट्रिसिटी या और एनी एक्सपेंडिचर इट इज़ देयर. सो जो एक्सपेंडिचर जो है उसको 500, 280, 950, all these things. Okay, so now what will be the effect? Okay, expenditure account. What will be done here? ये जो है this will be totally will be carried forward. Balance carry forward नहीं, taken to the transfer to profit and loss account में है. So what we will do, ये जो totaling होने के बाद में P&L अकाउंट में ट्रांसफ़र करते हैं. ओके, सो फर्स्ट व्हाट वी विल टेक, ये इसको ट्रायल बैलेंस में ले लिया. ठीक है, व्हाट इज़ द टोटल दिस. ओके, लेट्स सी, इधर समझो कुछ माइनस आ गया, समझो कोई एक्सपेंडिचर को जो कुछ माइनस आ गया, समझो 150 रुपीज़ माइनस आ गया. ठीक है, सो ये जो है जो बैलेंस है सी, ये जो 1680 ये तो इसको किधर बैलेंस ट्रायल बैलेंस में ले लेगा. सो ऐसे ट्रायल बैलेंस में एक आइटम करके ले लेगा, बैलेंसिंग लेजर को टोटलिंग करके वो टोटल का जो इसको है उसको ट्रायल बैलेंस में ले लेगा. सो दिस इज़ द मेथड. दोनों साइड को टोटल करता है, टोटल का जो कौन सा साइड में जो बैलेंस है, इफ़ इट इज़ अ डेबिट बैलेंस वो डेबिट साइड में ले लेगा, दैट इज़ द डेबिट बैलेंस इज़ द डेबिट साइड एंड क्रेडिट बैलेंस इज़ द क्रेडिट साइड. ओके, अभी वो दो आइटम का बताया, सैलरी सेल्स का बताया और एक्सपेंडिचर, कोई भी एक्सपेंडिचर उसका बताया. नो, डेबिट ऑल एक्सपेंसेस मीन्स जो भी एक्सपेंसेस है वो डेबिट ऑल एक्सपेंसेस, असेट्स, asset balances, advance given, receivables, etc. And now credit all income, capital balances, loans, advances received, liabilities, payables, outstanding, etc. So this is the rule. You should be very clear and you should understand this very well. Okay, now if the double entry principle is strictly followed, the trial balance will tally, trial balance must tally. You can prepare a trading account, profit and loss account and balance sheet from the tallied trial balance only. जो भी बैलेंस शीट टैली नहीं रहेगा, तो ट्रायल बैलेंस से टैली नहीं रहेगा तो उसका फाइनल अकाउंट बना के ये नहीं है, बिकॉज वो बैलेंस शीट टैली नहीं होएगा. तो फर्स्ट एंड फॉरमोस्ट थिंग इज दैट टू टैली द ट्रायल बैलेंस. Again I am telling you that tallying the trial balance is just making sure that the account this arithmetical accuracies to confirm, but there can be some principal errors, technical errors, like one account, one debit account increased and the other debit account decreased by mistake. It is taken separate way, or some means automatic adjustments, means credit side का debit side का जो effect जो होगा, so वो भी that is there are such type of errors that cannot be means find out with that tallying of the trial balance. But trial balance tally means it is arithmetical accuracy, means just to make sure that then the balance sheet will tally. That is a thing. So it is most important that before preparing final accounts, trial balance must tally and trial balance should be prepared. Okay, now I will show you the pro forma of the trial balance. ABC Enterprises ट्रायल बैलेंस ऐसा ऑन कौन सा डेट में जो ट्रायल बैलेंस प्रिपेयर कर रहा है, और ट्रायल बैलेंस मीन्स या कौन सा पीरियड के लिए जो ट्रायल बैलेंस प्रिपेयर कर रहा है, मीन्स ट्रायल बैलेंस एज ऑन पर्टिकुलर डेट में हो जाता है ना, मतलब एनी डेट मीन्स इन बिटवीन, सपोज मंथली ट्रायल बैलेंस बनाते हैं तो मंथली मीन्स इसका जो 31 जनवरी 31 या अप्रैल 30 अप्रैल 31 में, या नहीं तो मीन्स 6 मंथ्स के प्रिपेयर करेगा तो 30 जून ऐसा आएगा, या नहीं तो क्वार्टरली बनाएगा तो ऐसा भी हो सकता है, मीन्स 31 मार्च को जो बनाएगा, सो दैट द ट्रायल बैलेंस इज प्रिपेयर्ड ऑन दिस पर्टिकुलर डेट, एक पर्टिकुलर डेट में का ट्रायल बैलेंस बनाया है. नाउ वी कैन मेक इन टू स्टाइल्स, टू मेथड्स, टू स्टाइल्स. मेथड वन, this particulars of debit balance in one side, particulars of the credit balance in other side, amount also taken on the different sides. This is a debit column, this part is debit side, and this entire part is credit side. Okay, now what are the things coming into the things? Sundry debtors, purchases, sales returns, opening stock, land and building, furniture, machinery, carriage inward, rent, rates and taxes, drawings, salaries, bad debts, investment, advertisement, expenditure, bills, receivables, etc. There are other items also can come. Now credit items include capital account, capital invested by the proprietor or partners, then share capital of the company is like that, means that. And sales, and sundry creditors, sundry income, bank loan taken, bank OD, CC, overdraft and cash credit, discount received, interest received, purchase returns, commission received, outstanding liabilities, bills payable. This comes into the credit side. Okay, now both this total should tally. There should not be any difference. Now method 2, that is style 2, is that particulars column is particular column, particulars. Particulars are taken on the one side, this side, and then one column for debit balance and the other column for credit balance. Now see, this is same, we are just taking it here in this format. Capital account, then purchases debit, sales credit, sundry debtors debit, sundry creditors credit, purchase returns credit, sales returns debit, opening stock debit, land and building debit, because these are assets. Furniture debit, machinery debit, sundry income credit, bank loan credit, bank OD or CC credit, carriage inward debit, rent, rates and taxes debit, because these are expenditure and these are income and discount received, credit, interest received, commission received, outstanding liabilities. Then drawings, salaries, bad debts, investment debit, advertisement debit, bills receivable debit, bills payable credit, cash on hand debit, cash at bank debit. Then both these total should tally. Hope you understood this. This is very simple. It's nothing complicated in this. Okay, you have to just make attention when we are making a final accounts and the adjustment entries. That time it needs to be very attentive. So hope you understood this, how to make a trial balance. Total of ledger balances are totaled, and that out of the total, which side it comes, the balance balance which side it comes, that accordingly in the trial balance, if it's a debit balance, it should be taken on the debit side of the trial balance, and if it is a credit balance, it should be taken on the credit side of the trial balance. Okay, this is the simple thing. Now we will I hope you understood the trial balance, preparation of trial balance. Okay, the format also you have seen. Now let us see the trading account. Trading account, according to J.R. Bartley By, trading account indicates the results of buying and selling of goods. While preparing this account, the general establishment charges are ignored and only transactions related to goods are included. Means revenue transactions are taken into the trading account, that is direct expenditure and direct income are taken to the trading account. Okay, trading account is a nominal account. Trading account is prepared in the trading organizations for the purpose of find out gross profit or gross loss incurred during the year. And in the debit side of the trading account, all direct expenses are taken, and in the credit side, all direct incomes are recorded. Now, in the trading account, credit side is more than the debit side of the trading account. Then the account shows a gross profit earned by the firm. That means when the total of the credit side, for example, sales, closing stock, etc., and if that is more than the debit side of the direct expenditure are opening stock, and means then purchases, less returns, and then carriage inward, wages, factory expenses, power, fuel, etc. All these direct expenditure are taken, and out of this, if the total of the credit side is more than the total of the debit side, then there will be a gross profit. Whereas if the debit side is more than the credit side of the trading account, then the account shows a gross loss incurred by the firm. It's very simple. Now, gross profit or gross loss is transferred to profit and loss account. Once the trading account is prepared, it is transferred to the profit and loss account. Smart. Refer to the working note for illustration. Now, I will show you trading account. Now the rule is that debit all direct expenses and credit all direct income. Okay, this is a rule. For that, now you should know what are the direct expenses and direct income. Okay, let's see. First we will see what are the direct income. Okay, direct income. Say what it is prepared. This is from a trading account. If it's enterprises, means for the purpose of just I have just shown that for to make you understand. Trading account trading account for the period for particular period. It is whereas we prepared a trial balance or we prepare a balance sheet. It is we'll mention it is as on particular date. Financial position of the balance sheet as on that particular date. Whereas when we prepare, if it is a 1 month trading account, then also it should be it is said that from first suppose if 1 month for the April month, 1st April to 30th April. Why? Because the entire transactions of the particular month or 3 months or 6 months or 9 months or 12 months, these 12 months transactions and the result of the transactions are taken here in this trading account. Trading account for the, that is why it is trading account for the period 1/4/2022 31st March 2021. any means accounting year it can be. Now these are the direct income by means sales. It is mentioned as a by okay, and here in the debit side it is 2 by sales less returns and taken to the outer column. Then goods lost by fire, goods lost by theft, goods distributed as free samples, goods lost in accident, goods withdrawn by partners, then closing stock. If then this is a direct income came up to here, direct income up to here, and then this is a stock inventory. Okay, then it comes to the means debit side, direct expenditure. Start with the opening stock, then 2 purchases less returns taken to the outer column, carriage inward, freight, dock charges, custom duty, clearing and forwarding, wages, then wages and salaries. It's one and the same. If it is mentioned wages first, then it should be taken to the trading account. If it is mentioned salaries first, then it should go to the profit and loss account. Okay, that is a difference. So for your means just a clarification, I have taken it like this: wages and salaries. On the contrary, if it would have been means salaries and wages, it will not come here. Okay, that is the thing. To power and fuel, production power, gas, factory, electricity, etc. All these things. Then royalty paid on purchase or production. To primary packing charges, factory lighting and heating, factory rent rates, etc. Then factory maintenance, repairs of machinery, factory building, etc. Stores and spares, consumables for making the finished goods. Some other consumable items are used. That is called stores and spares consumables. The factory administration expenses, factory insurance, works manager salary, trade expenses, etc. So if this total is total less this, if this total is more than this total, then there will be a gross profit. Whereas if this total is more than this, then there will be a gross loss. Okay, you understood? That is as simple as that. In case of wages and salaries, now the note given is that in case of wages and salaries, term is used in trial balance when the effect should be when the item wages and salaries is given, in which wages are appearing first, it should be transferred to the trading account on debit side. When the item salaries and wages are given, in which salaries are appearing first, it should be transferred to profit and loss account on the debit side. Okay, that is the thing. Hope you understood this. This is also very simple. Now let us move to the other part. Profit and loss account. As per R.N. Carter, a profit and loss account is an account into which all the gains and losses are considered in order to ascertain the excess of gain over the losses, or vice versa. And some points what we discuss in the trading account, all the same will be coming here, except that those are direct expenditure and direct income and direct expenditure. Here all are indirect income and indirect expenditure. Now the profit and loss account is a nominal account. The profit and loss account is a main account in income statement. It is prepared to ascertain the net profit earned or net loss suffered by a business concern during the accounting year. Now, in the debit side of the profit and loss account, all indirect expenses are taken, and credit side, all indirect incomes are recorded. Now, if the profit and loss account credit side is more than the debit side of the profit and loss account, then the account shows net profit earned by the firm. Means if the credit side is more, total of the credit side is more than the debit side, then there will be a profit, net profit. If the debit side is more than the credit side of the profit and loss account, then the account shows a net loss incurred by the firm. That means if the if the expenses are more than income, then there will be a loss. That is the thing. That's all. Net profit or net loss is transferred to the partner's capital account or partner's current current account. Profit is added to capital and loss is deducted from the capital. Now let's see the working note. I'll show you the profit and loss account. Now the rule is that debit all indirect expenses and credit all indirect income. The pro forma is profit and loss account. Profit and loss account for the period April to 1st April to 31st March. Now let's see first the credit in indirect income. The profit and loss account, the gross profit. If it is a gross loss, it should be taken to the debit side of the profit and loss account. If it is a gross loss, it should be taken to the debit side of the profit and loss account. If there is a profit, gross profit, it should be taken to the credit side of the profit and loss account. Okay. Now credit. These are the indirect incomes: commission received, discount received or earned, interest received, dividend received, royalty received, rent received, miscellaneous receipts, etc. Okay, now what are the indirect expenditure? Advertisement expenses. Here also we just proceed with buy and here it is 2. Okay, debit side it is 2. 2 advertisement expenses, 2 delivery charges, 2 transportation, 2 secondary packing expenses, 2 traveling expenses of salesman, to export duty paid, to clearing charges. Well, if it would have been an import duty, then it should go to the trading account. It is an export duty paid, export clearing charges, to sales charges, to salaries and wages. Here it is, salaries came first, so it is taken here. To provident fund means out of the in provident fund we collect from the staff also. A part of it is now collected from the staff, 50%. So that 50% is taken, and the 50% should be added by the company, means the organization. So the business organization add the 50% with administration charges and other expenses. That excess payment should be debited to the profit and loss account. After minusing that collection minus the payment, the difference should be taken to the profit and loss account. Then ESIC also like that. A small portion will be collected from the staff, and the difference amount, excess amount paid should be taken to the profit and loss account. Then bonus paid to staff, then leave encashment paid to staff, leave travel allowance, then to staff welfare, to staff incentives, to labor welfare expenditure, to staff insurance, to interest on bank term loan, interest on bank cash credit, interest on OD or cash credit, interest on unsecured loan, interest on NBFC loan, means non-banking finance companies loan, to bill discounting charges, to bank charges, to electricity charges, to telephone charges, to rent rates and taxes, to insurance premium paid for assets, stock, etc. To here if it is a personal means partners insurance is paid, that will not come here because that is a personal expenses. If they have paid from the company, it should be treated as a drawings. Okay, now that will not come to the profit and loss account. Okay, this is paid for the company because the insurance premium paid for stock and assets is an expenditure of the company business, to printing and stationery, to conveyance, to loading and unloading, to legal and professional charges, to solicitors fees, to taxes paid, to repairs and maintenance, to entertainment expenses, to carriage outward, to commission allowed, to discount allowed, to staff allowances, to bad debts, to general expenses, to loss on sale of fixed assets, loss by fire, loss of goods by fire, loss of goods by theft, loss of goods by accident, sundry and miscellaneous expenses, to other office expenses, to depreciation. So these are the things coming on the debit side of the profit and loss account. And then if whatever is the profit coming, net profit coming, since it is a partnership firm, the net profit is allocated, distributed to the profit as per the ratio mentioned by in the partnership deed in case of profit. If there is a loss, it should be distributed to the partner's capital account as per the ratio provided. As per the if there is a loss, that should be distributed as per the ratio provided in the partnership deed. So that is the thing. That is all. Now, accounts heads are created on the basis of the nature of business and products. See, this account heads, no, some of the means it's not required for all organizations. It is not required. It may be required for some organizations. Some of the account heads are required. For a small organization, it is not coming. For if there is no export, then there won't be any export duty, export clearing charges, etc. Like that. If it is not a manufacturing organization, then there won't be any packing charges, etc. Coming. The secondary packing charges will come. Then like that it is. No, see, for example, if it is not coming under labor, इसमें labor welfare expenditure नहीं आएगा. Bank OD bank loan नहीं रहेगा, तो means that will not come. So that type means whatever is required, that will be as per the organization, it will be taken. Now if the list is very big, so it cannot be accommodated into the small summary of the thing. So what is the method adopted here is to make it in a summarize in a one page. The expenditure and all the things, it may be running into means many heads. So what the organization does, it makes some summary of the accounts. Okay, means the selling and distribution, it is grouped. A grouping of the expenditure as per the nature of the expenditure means that will be grouped. What are the selling and distribution expenses will come under the, like this, and this will be taken to the profit and loss account as per given by schedule. When schedule 1, schedule 2, or schedule A, schedule B, like that. Okay. Now, when the selling and distribution expenses, advertisement expenses, delivery charges, transportation, secondary packing expenses, traveling expenses of salesmen, export duty, export clearing charges, sales charges, etc. These are the selling and distribution expenses. Okay, then personal expenditure comes like this: salaries and wages, PF, ESIC, bonus, leave encashment, leave travel allowance, staff welfare, staff incentive, labor welfare, and staff insurance. Here in this case, no selling and distribution, no sales staff salary and sales incentives will come here. If it is a very large organization, if it's a very small thing, this will not be taken into the common account. Personal expenditure में ले लेगा. Now the financial expenditure is means the finance taken by the organization, and on that the interest paid. These are the expenditure coming under financial expenditure: interest on bank term loan, interest on cash credit, interest on unsecured loan, interest on NBFC loan, bill discounting charges, bank charges. These financial charges will come. Now administration expenses. These are a very long head. Should be clubbed. So electricity charges, telephone charges, rent rates, insurance premium for fixed assets and stock, printing and stationery, conveyance, loading and unloading, audit fees, legal and professional solicitors fees, taxes paid, means other taxes. Then excess taxes paid and excess paid over the collection, that is the charges, or any other rent rates, municipal taxes, ये सब जो आता है वो सब, repairs and maintenance, entertainment expenses, carriage outward, commission allowed, discount allowed, staff allowances, bad debts, general expenses, loss on sale of fixed assets, loss by fire, loss of goods by fire, loss of theft, goods by theft, loss of goods by accident, sundry and miscellaneous expenditure, other office expenses, depreciation, etc. This will be grouped, and then that particular group, the summary will be taken into this thing. So that is a way this profit and loss account is prepared. I hope you understood this. Now in the next thing we will discuss about the balance sheet and the pro forma of the balance sheet. First, now next class I will just explain that combined trading and profit and loss account, and then balance sheet. Now I request all my students to study regularly. If you don't understand, watch again and again. Because I want all my students to score full marks in the subject or just close to 100% mark. Most important, you must make a strong base in the subject, so that decides your career ahead. Please read again and again, learn and practice to achieve your life's goal. Help each other to grow together for a better India. I request you all to share video the classes to reach more and more people, so that many students and public can take the benefits. Thank you for your attention. We'll continue in the next class.